right, welcome to episode, what is this, 12, 13? I forgot, I'll figure it out myself. But welcome to episode 12 of the ICT Mastery Mentorship. In this episode, we're going over liquidity purges, okay? In the previous 3 episodes, these episodes, I guess you could say, were linked together. I put these in the same, like, little 4-episode, sequence, like, consistent 4 episodes. I put these together purposely to help you understand it easier. And this is the final episode of these linked 4, which is liquidity purges. Then we're going to be moving on to the harder stuff within this chapter. Not harder, but, things to help you analyze even easier. But liquidity purges, okay, is a form of market protraction and or manipulation, okay? But from now on, we're going to refer it as manipulation, okay? Market protraction is manipulation, okay? But we're going to say manipulation because it's just easier to understand, because some people don't even know what market protraction is. I'm just going to keep it a buck. People really don't know what that is. But liquidity purges, okay, let's go over those real quick. Liquidity purges is basically like if we have a high right here, right? If we have a high right here, and we can say it's, I don't know, buy side liquidity, okay? Price wants to head higher, okay? It smashes it, right? Then goes back down, probably goes back up, then shoots down, and then bam. The liquidity purge is right there, okay? Because why is that a liquidity purge and not a liquidity run? It's because you see how it just took it out and it barely went any higher above it? That is liquidity purge. I'm going to show you how you can spot liquidity purge, but it's basically when price takes out a higher low and has a willingness to reject away from it, okay? And what I mean by willingness is it shows some sort of confluence that it wants to run away from that high. All right, so that's what, a liquidity purge is. If I could get rid of all these drawings before we begin. Bam, okay. Now, looking here, right here, right along there. See that? We have buy side liquidity here. Bang, okay. So we have buy side liquidity. We already know that price came up and took out that high, but where are we in price? Like, truly, where are we? Because if we draw our dealing range from, my mouse is lagging, from here to here, we're in a what? We're in a premium. We're above the equilibrium. So if we're in a premium, right, and we see buy side get taken, we would either expect a, run back into equilibrium or a run back into deeper discount. And did we do that? Yeah, we did. But let's go over the anatomy of how we did this. Okay, so we're in a premium. Okay, that's our confluence already, is that we're in a premium. Then looking here, we came up and took out this high. But how do you know if it's a liquidity purge? Okay, you will literally see price stop moving. Okay, not literally stop, but you will see it slow down. Because if we look, even in hindsight, you can kind of see it slow down. Just through the exaggeration in the illustration of the candles, you can see how price literally slowed down as soon as it got to that high. You can literally see it. And then paying attention to the bodies too, because I'll teach you one thing before we go any further. Okay, the bodies tell the story, and the wicks do the damage. Okay, the bodies tell the story, and the wicks do the damage. Okay. So basically what that means is the bodies, right? Whatever the bodies are doing, that's really that's telling you what's going on, okay? But the wicks are basically going, I guess you can say it's just going to be doing the work. Exactly. So the wicks are going to be doing the work while the bodies will actually tell you why it's doing the work. If you get what I'm saying. Bodies will tell you why it's doing the work. The wicks will do the work. Very simple. Very, very simple. Because if we look here, right? As soon as we came up to that high, we closed below it, okay? The body's right there. We came up, wicked higher. See that? Wick came right back down and closed below it. So that's showing a willingness to go lower, okay? And same thing with a low, okay? If we have a low that gets purged down here, see how we came and took out this low down here? I think it came out and took it, did it? Let's see. Did I even select it? No, I didn't. Very close to it, yeah. It didn't come and take it out, but this low here, you see how we came into that low? Then closed higher above it. See how the wick did the damage and the body is telling you like we want to go higher? It's just common sense. If price comes down into this low and says it pulls price all the way back up, that's a confluence that price wants to go the other way, or it's rejecting away from that low, or it's a liquidity purge is formed. Then you want to look for some sort of confluence or anything that's telling you that price wants to go higher. Simple. It's nothing hard at all, really. It's really nothing hard. And then if you draw from this dealing range here, from here to here, we came close to equilibrium, but I guess you could say we had a little market protraction before finally taking out this high and coming back into a premium over here of this two range. But we're not going to do too much that confuses you. Looking here right now that you should understand what I mean by wicks of the damage and bodies of the story. Looking here, you see how price came in and took out that high, or took out buy side liquidity, and then came back down and closed below it. That's showing a willingness that price wants to go lower. Okay. That's showing a willingness that price wants to go lower. After this, you want to look for some sort of displacement, okay? So, impulse price swings, like I said, impulse price swings are a form of what? Displacement, okay? And, market protraction is a form of manipulation, okay? Market protraction, okay, let me explain this. Impulse price swings and displacement are the same exact thing, okay? But you would refer a impulse price swing as displacement, and you would refer market protraction as manipulation. Very, very simple. But there's also forms to manipulation. Okay, you're going to learn a lot of forms of manipulation. There's a lot of them. There's a lot. And I'm not trying to intimidate you, but there is a lot of forms of manipulation and a lot of forms of displacement. Okay. But looking here, we manipulated into this high, and then we closed below it. Okay. So any stop losses or any, I guess you could say, buy stops that were up here have now been triggered in, and anything that was protecting their orders is now taken out. So those retail traders that are resting up there are now gone. We came up to that high, closed below it, showing a willingness to go lower. What do we want to look for now? A true willingness to go lower. We want to see some sort of displacement going lower. Do we have that? Yep. Bang. Right there. That's your displacement. Right there. That's your displacement. Pretty cool, isn't it? And if you want to, catch this run, you could have took this fair value gap. And if you see price respecting the fair value gap, I don't know why, but I keep selecting my mouse and it will not actually select the thing. But going into it here, price comes into the fair value gap, and if you look, it doesn't push past it. Okay, it respects it. It doesn't push past the fair value gap. It's staying in the fair value gap, and it's, I guess you could say, properly offering fair value. Okay. Because I taught you what offering fair value means, so you should know what that means right now. If you need to go back and watch it, I think it's a couple episodes back. I think it's in the fair value gaps video. But here, see how price is just staying within the fair value gap? It's not going past it, it's not pushing past it. That's your confluence to enter, okay? Once you see price doing this and it's not pushing any further, you can go ahead and take your sell. And then where can you target? That low there. Right there, see that? That's your point of sell side liquidity. Right there. And did price take it? Yep, it did. You can also target this low here. Did it come to it? Let's see. Yep. Directly on it. Pretty cool, honestly. Really cool. So that was your fair value gap. You could have targeted that low there, or this low there, or that low there. It really doesn't matter. Okay, but there is going to be more lessons and episodes on how you can predict where price is going to go. Okay, there's going to be many more lessons on that. Okay, because this is a short-term swing right here. That's a short-term swing. This is what is this? What is it? Intermediate term swing. But you don't even worry about it. Don't even. Okay, don't even try to. What's that? What's this? How? Don't even. Trying to take it slow. Okay, just trying to take it very, 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 very slow. Okay, very slow. So now let's I guess you could say delete all these drawings so my computer won't start lagging. Zooming into this example here, alrighty, right along here, we have this dealing range here, right there. We retrace this displacement, okay, because like I said, with displacement or with fair value gaps, it has to come and rebalance them, okay? So there's a fair value gap here, and it has to come and rebalance this, fair value gap there, and it has to come rebalance that. Price comes up to the fair value gap. What do we also reach into? We also reach into a premium dealing range here. So we can be looking for some sort of sell, okay? Right here at this high, what does price do? Manipulate. What is that? A liquidity purge. Do I have liquidity purge on here? Yep, I do. I forgot I had it there. But there is your liquidity purge right there, okay? Price goes lower, and then goes higher. bang. Okay, but where's your entry at? Like, where is your entry? You're probably asking that. Like, where would my entry be? If once you see this retracement, back up into, into a short-term premium, I guess you can say. Yeah, short-term premium, exactly, a short-term premium. Because if we look here, from this dealing range here, this little range here, we came into a short-term premium, and then we started displacing away. And then you could take some sort of fair value gap, because it has to retrace into a fair value gap or off a fair value before going anywhere. It touches that fair value gap, and does it displace through it? It does, but within the wicks. Okay? Remember, like I said, the wicks did the damage and the body said the story. The wick came into it, but the body closed below it. You could have took your sell there, then either targeted where? Targeted down here, or either down here. Does price come to either of those levels? Let's see. Bang. And bang again. Pretty cool, isn't it? Very, very, very cool. So if we mark this as sell side liquidity, if you mark this as sell side liquidity, that would have been your target right there. You want to see the trade? Sure. Why not? Sell position right there. Have your stop, I don't know, probably, at the high of the fair value gap. And then you drag it to either this, which would have been 3.5 risk to reward, and this would have been 5 risk to reward. Pretty good. So if you risk 5% on this, you would have made 25. If you risked 5% on this, you would have did how much? 15%? Yeah, 15. About 15, 17, something like that. But there's your trade there. And it's very, very simple to spot these. You'll learn more confluences on how to spot these, because right now you're probably like, okay, I know what a liquidity purge is, but how do I anticipate it? Okay, I really just taught you how to anticipate it with just fair value gaps, liquidity, and premium and discount ranges. But obviously, there's more to that. There's clearly more. I'm not gonna say there's a lot to intimidate you, because there really isn't. Okay, once you learn everything I'm gonna teach you, I'm gonna teach you how to compress it and consolidate it into one piece of your brain to where you can use it efficiently, okay? But I hope I gave you a pretty good rundown on what liquidity purges were and how you can actually anticipate them, and I'll see you on the next episode. Peace.